Oil breaks $90 a barrel for the first time in 2 years. Tim Jennings, president of Vantage Trading, joins us now to talk about all of it from the New York Merc. Tim, so let's just talk about the driver behind this here. I mean, is this one driver? Is this a confluence of elements? What we heard from Bernanke this week, the equity market, questions about the currency market. What's your take?
Well, that's an interesting question because I think it really addresses the fundamental shift in the crude oil or the energy market in general to becoming much more of a financial instrument. Traders are looking at fundamental factors and economic factors as well. And so I think right now traders are looking at the storage figures coming out tonight, this afternoon, and then tomorrow morning to give us some kind of fundamental indication that maybe demand's picking up. The projections are that the stockpiles are going to be reduced. There's going to be a draw on crude oil. I think the psychological number was $90, obviously, and we failed there. So it'll be interesting to see if the storage figures are as bullish as the expectations and to see if we'll trade higher from there.
What about from an overall standpoint, looking a bit longer term here, of course, into 2012, your view on how closely you think the oil market will track the equity market?
Well, I think there's a tendency for it to be much more highly correlated to the equity markets and the dollar as well. But I think that it's kind of a self-fulfilling prophecy. The energy agency came out and projected that the 2012, 2011 prices would be higher. I just think with the ban on the Gulf Coast drilling, I think that fundamentally the market's looking to move higher as well. So I think that even though it tracks the equity markets, that I think that other factors are aligned to push this market higher.
Looking at the demand picture, how much would you say that China is a factor here?
China's a huge factor in the minds of traders. That anything they do to blunt the economy in China reduces demand going forward, and I think that they're soon to overtake the U.S. in terms of consumption. So I think the traders definitely are looking to China to see any kind of economic news, positive or negative, and how that'll affect the equity or the energy markets.
Finally, Tim, long-term and short-term or near-term calls for oil. Where do you see it going?
Well, I was kind of surprised by the move this week up to $90. It really depends going forward if we have the draws that are projected. If we see demand picking up, if we get cold weather, Europe obviously has cold weather, and they're still in the after effects of the French strike. So I think that the fundamental picture is starting to change, encouraging higher prices, and I think that you see the dollar weaken. If the euro strengthens at all, then that could also move higher. But I think that now that we've tested the $90, that I think the market will try to test that again. And
long term, say the next year, do we see oil top 100? Are there fundamentals for that?
I think the fundamentals are starting to get in place. I think if the economic policies in Europe and in the United States, and then if China doesn't discourage economic growth and they continue to consume as much or more than they are now, I think fundamentally the market's positioned to move higher.